And we're live. Hey, Robert, thanks for showing up today. Like everybody else calls you Bobby. Sorry, I'm just so formal.
No, it's okay. Thanks for having me, Ed. I appreciate it. Appreciate
No,
your time.
I appreciate you coming on. Robert and I have been doing a lot more lives together, just because it's working, right? So, all right. And today, I think you asked me you wanted to do something different. You wanted to talk about. So you were saying how a lot of people, when you were doing rentals and property management, would not. So I'll let you tell the story. Go ahead.
Yeah. So an easy way to qualify people, like our leasing agents, they would, they take everyone's pay stubs and they try and figure out what they made every month. And I said, hey, general rule of thumb, based on what our 3-bedroom is, which is the most expensive unit we had, if they make $25 an hour or more, then we already know financially they qualify. Now we just need to look at credit. So I know that's probably an easy metric for people who haven't even looked into buying a home. A lot of people
Mhm.
might ask, like, hey, how much could I actually qualify for if I made, X number of dollars, could I actually buy a house? Because I think the idea of even talking to a lender or a realtor can be a little intimidating in the beginning. So just kind of seeing if that's even a possibility kind of opens up a lot of doors.
Right. And so I ran some numbers, right? And you're like $25 an hour. What would that get us? So
Yeah.
I'm just gonna throw in that. So 25 times $40. I mean $40, 40 hours a week. On average, your paycheck should be before this is before taxes. Right. We always look at gross. I ran the numbers and you could buy a house at 400,000 FHA for that price point. And that would let you qualify for that house. Right. I don't have the payment here, but I would think the payment. Oh yeah, here it is. You remember put the payment here. So that's a 2410 payment, $2,410 a month payment, which
Uh-huh.
sounds like a lot, but that includes your principal and interest, your taxes, and your insurance amount, and also the mortgage insurance. So I did FHA 3.5% down. So 3% down is 12. So 3.5. You're looking for, here, I'll get my calculator while you're
Like I say,
talking.
on 400,000, that's like 12,000, right?
I
Three and a
think
half.
so. I think so.
Yeah.
Let me just make sure. 14,000.
14,000.
Yeah. So your down payment would be 14,000. Your payment would be the 2410, and then you also would need, on average, for escrow and title fees, those type of things that we don't. That's not our fees; those are escrow and title that you negotiate with the seller. In our area, you probably need another 3,000 for that, plus setting up your impound account, another $7,000. But let's just talk about affordability, what you can buy. So $25 an hour is not a huge wage, right? I mean, it's a good wage,
Yeah.
but for most people, that's starting for like MAs over at Kaiser or other things. So if you're a family and you have no debt, you can buy a bigger house. You can buy more things because you have no debt. Once you add the debt in, that takes away. Say you add a $500 a month car payment. Now we just took away 100,000 in a purchasing power, right?
Yeah, and that's what I've seen a lot. I've had renters in the past that wanted to buy homes. They were renting an apartment, but they had just bought a new car. And I was
Yeah.
like, man, if you talked to me 6 months ago, I told you, let's at least get in a home first before you start looking at a new vehicle. Because
home, then cars, because the home, we have a debt to income ratio, which means for every dollar you bring in, how much debt goes towards your mortgage and goes towards your other bills, right?
yeah,
So we want to keep that number at, like, your upfront is usually 40, and then your back end is up to 50. Sometimes that can go up to 56 with FHA, up to 63 with VA. These are, I know I'm talking all foreign stuff right now, as Marlene calls it, French. But the issue is that's for me to figure out for you.
yeah,
Your thing is pay the debt off you can before you buy. And let's look at what you can qualify if you don't pay off, what you can qualify if you do pay it off. I've been telling a lot of people, and I just had one. She was self-employed. I told her, no, stop being self-employed because you don't show any income. So she went and got a job right away, right? There's 9 million, 10 million jobs out there. Go find a better job that pays better so that you can buy the house you want.
yeah.
Right. That's if you have the skills, whatever, with all these different jobs. So she went, and she got $20 an hour. And then she went and got a $25 one a week later. So she's set up to buy, and she's up in Tuolumne County. So she's in a price point where she wants to be at,
Yeah.
about 300, that she can still buy a 2-bedroom, 1 bath. That's what she's looking for. So it's just a matter of what are you looking to buy And do you qualify for that? And can you afford that payment? Because I had somebody else come to me yesterday and said, hey, I want to buy $800,000 property, right? It's my wife's dream home. And then you run the numbers and you tell them, okay, well, that's like a $4,500 a month payment with everything. Is that something you want to do realistically? And then, of course, some people say yes. You and I would both go, heck no, let's buy some more property and let the renters pay those payments.
Yeah. But invest that money, right? But the wife's dream home, you can't argue with that.
Right. Well, we're doing with our property. Eventually we'll have, a big house on it and the whole 9 yards. It's funny because we put up these cameras to protect these gates, and all I've been seeing lately is bears and deer.
Really?
Yeah. I was like surprised.
Like black bear?
Yeah. Big black bear went through the other day next to the gate. Yeah. I was like, that's wow. Cool. And I sent it to my guy. Did you see that? And then yesterday was a doe. And then today was a big buck walking through there. I'm like, wow, they didn't know there was. Yep. I think it's because, that's cool. You put the gates up and then less people travel the roads, right? With cars and stuff. Yeah.
And you're not up there all the time. So, they probably know there's not a whole lot of folks around there.
Well, it's not hunting season anymore. But anyway, back to real estate, right? Not hunting. So basically, if you $25 an hour gets you, we'll just say easy 400,000 with no debt, 300 with, a $500 to $600 car payment or whatever. So again, get somebody else to come on the loan with you. So if you're married, you have two people.
Yeah. Well, then
work on your credit. I had somebody the other day ask me about credit. How do you do, should I get into a loan with bad credit? I'm like, no, don't get in a loan with bad credit. Let's work on your credit for the next 3 months and get you in. I had a lady just recently, I ran her numbers and she had no FICO scores. So I said, you only have this one debt on there, which call them up. They'll take it off because it was a medical thing. And I said, go get 2 secure credit cards, at least, if not 3. And then get your rent history added onto your credit report. And that credit report, the rent history will be about 40 points. The other stuff within 30 to 60 days will raise your FICO score, and you'll be now a 680 or greater. And it's a totally different world when I'm working with trying to qualify you. Remember, you have to have credit score first, money for down payment, or I should say credit score first, income, and then money for the down payment or not.
Now, how did she not have a single FICO score? Had she not?
Because she only had
money.
She had nothing on there.
No
so, and you got to remember, so if you never got a car payment, right, you pay cash for your cars. If you don't have credit cards, you get most credit from credit cards, how you use them. That's what's great about it. So that's why secures work real quick, right? You get 3 of them. You don't have to build anything. You pay $350 for a secure credit card. You get a credit card. You use it a couple of months. Now, put $10 on there. Hardly just use it for one little amount and pay it off. Now you have if you never had anything, you'll have a 700 plus FICO score.
No kid.
Yeah. If you have no debt, no bad debt. She's probably going to have a 680 because of the fact that she has 1 or 2 things on there. And another kid, same situation. All he had was, issues with, collections, and they're all medical, but still he had no credit cards, no car payments, no nothing. So they needed to pay for that. So.
Yeah. So unfortunately that person just had nothing but bad credit, huh?
Yeah.
Was he able to turn
like
around?
A country song. Yeah, it's easy to turn all this stuff around. And I've had, people reach out through me on Facebook, right? Hey, can I put this on your thing about helping people with credit, how to fix their credit? I'm like, no, because 99% of you guys are, I don't want to say frauds, but they don't do what they say they're going to do. It's so easy to do it, and you can do it yourself. You don't need to pay a company to dispute your items. You can go get one of the bureaus, pay for them to get your credit report, and then be able to dispute the things. And you're able to do the same thing those other companies do. All they do is dispute them and see which ones fall off if they don't ever come back on. You can do that. Yeah. And the other thing you can do is then we'll tell you what you can do to raise your FICO score. Because a lot of times it's just, you have 1 card or 2 cards that are max, take them down to 50%, and then your score goes up drastically. And that's, a lot of people don't know how to use credit properly. And that's where the issue is, because the higher their FICO score, the lower your interest rate is. That means the lower your payment will be, and the more you can qualify for also. So example, $25 an hour gets you 400,000 with, let's just say, a 680 FICO score for FHA, right?
Uh-huh.
That's a 3% or less, right? FHA was in the 2s for a long time. But if you have a 620 FICO score, you're going to be closer to 4%. And this is just an example, right?
Uh-huh.
Because of your FICO score. So let's work on your credit first of all, then work on your job at the same time, and then let's get you into a house. House values are going up, but there's no sense to strap yourself to where you're going to lose the house because you can't afford it down the road.
Here's a question I get a lot, and I figured it'd be a good thing for you to talk about. So, say someone has a couple of credit cards and they want to get into a transaction. A lot of times, people want to pay off those credit cards right away. Can you tell me why that'd be a bad idea?
Why are they just going to pay them down, or are they going to close them?
They're going to close them.
You don't ever want to close credit cards. And it was like, what? And because I had a lady who was doing a refinance for her, and she had a 780, right? Just right. And then I ran her credit. She had a 710. She had just closed one of her credit cards that she had for a very long time. Credit cards gives you you get most credit from it, how you use it. Once you close them, you lose all history associated with that card. So if you had that card for 20 years, you've had the card for 10 years, you've now lost all that good credit history with that. So it's gone. So you never want to close your credit cards. You always want to have a few of them, always put, every other month, something on each one, pay it off and keep using them. That will increase your score. I have an example. I mean, during the downturn, I got hit hard and my FICO score dropped to like 580. I'm back up to 800, and I did exactly what I tell people to do.
Yeah. Well, that's good. You followed your own advice.
Well, no, that's how I came up with my advice.
Yeah.
I did it for me.
Okay. That's how you came up with it. Okay.
And I figured out how it worked. When I tell people what to do, I've been through so much in my life. It's probably happened to me, and that's why I'm telling you how to do it and how to fix it.
Yeah.
You follow me? I didn't come from money. I came from poorness. My dad died when I was 12. We moved to the really west side of Turlock in an old country house, right? And my mom barely paid $100 a month for rent on 3 acres. It was not a great house, but it was what I went through high school, and I worked at my grandfather's dairy. So I understand hard work. I understand what to do. So that's where I come from. I'm just saying nothing's ever come easy for me. So I had to work at it and figure around it. So if I'm telling you to do something, it's because I probably did it, or I helped somebody to do it.
That's the best advice then, right?
Yeah.
Advice is proven. Yeah. Well, I appreciate your time, Ed. I know your time is very valuable, but
thank you so much. That's so appreciative.
like I was saying, I just wanted to kind of get the word out there. So people who are kind of curious, like if they've never even spoken to a lender or a realtor, and they're just kind of curious if they even qualify for a house. Now, $25 an hour with no debt, that you could qualify for up to $4,000.
Right. Easily. And I've had more people who've had money to put down, have a really good FICO score and a great job, not know they can qualify for a house.
Yeah.
It's rampant out. Everybody thinks I need 20% down. No, you do not. If you're VA, 0. USDA, that's county areas like all of Tuolumne County, Calaveras County is under USDA. You could buy up there for 100% financing. Then you go with 3% down conventional. If you got a 700 plus FICO score, you want to go conventional. If you don't, let's work on it. And then 3.5% down for FHA. And then it goes 5, 10, whatever you want from there on. Yeah. So, and I am against people putting 20% down all the time. If you can run the numbers and show them 10% down with this little mortgage insurance that we have today, it's so cheap. It's so much better because you can keep that $40,000 in your bank account in case something happens. That'll save you for years, because I tell people, what's it going to save you by putting that extra money down? $200 a month. All right. What's $40,000 divided by $200 a month? That's how long it's going to take you to pay yourself back.
Well, and so, there's so many renters out there, especially in this rental market today, that if they've been saving money and they're paying, say $1,700 a month at a nice property, they probably don't even realize that they qualify for a home loan. Like probably no problem, because most properties have minimum 650 credit score, then your debt to income ratio has to be low, and you have to gross at least 2.5 times the rent.
Right. And people understand that it's harder to rent than it is to buy.
Absolutely.
And I'm not saying we're giving money away for free, and it's like you just have to have a pulse, like back in the 2002 to 2004. You have to be qualified. There's new laws that came into effect called ability to pay rule, that we have to make sure you have the ability to be able to afford it and pay for it. Otherwise, if we just run it through, we get in trouble. So Yeah. So there's many reasons. So and it's so affordable today versus how it used to be, even though the values have went up as much as they did in last year and the year before and the year before. We're just as affordable as we were during the downturn. That was much greater, but we're real close to that. Yes, it's getting less affordable as we go, but we're still at that situation where it's the perfect time to buy still. Yeah. All right, Robert, thanks for coming on. I appreciate it. And thanks for saying how great of a guy I was. I appreciate that.
Well, thank you again for your time, Ed. I appreciate
All right.
it.
Yeah. Have a great day, man.
You too.
All right.